You may be wondering what you can do to plan ahead so you are prepared when it's time to pay your taxes. The first step is to know approximately how much you will have to pay. You can write to the Department of Revenue to find out which B&O tax or public utility tax classification you fall under, whether you are required to collect retail sales tax, and if you will owe any other excise taxes on your business activities. For your insurance taxes and premiums, you can estimate how much you'll have to pay each quarter. For unemployment insurance tax, estimate the total amount of gross wages you will pay your covered employees for the quarter. Then, multiply that by your rate. This gives you an estimate of the taxes you'll pay for the quarter. To estimate your workers' compensation premiums, take the total hours you expect your covered employees to work for the quarter. Multiply that by your rate. This gives you an estimate of the amount you'll need to pay for the quarter. You may have more than one rate if you have workers who do very different kinds of work. The second step you can take to be prepared to pay your taxes is to make a plan for how to have the money available when it's due. One way you can do this is to set the money aside in a separate account over the course of the month, quarter, or year. This is an especially useful way to save the retail sales tax you collect. The third step you can take is to know which deductions, credits, and tax incentives you may qualify for. To learn about the different tax incentives that are available, check the Revenue website from the link at the end of this presentation. The fourth step, for businesses with employees, is to learn about the different ways you can lower your rates. For workers' compensation, if your business goes 3 years with no compensable claims, you will receive a claim-free discount. A compensable claim includes something other than medical costs, such as wage replacement or a pension for an injured worker. The typical claim-free discount for a small business is about 10% off of the average rate for your type of business. And when you have a claim-free discount, claims that require only medical treatment do not affect your rates. Many employers choose to keep injured workers on salary while they recover from a workplace injury so they can keep their claim-free discount. Talk with your L&I account manager to see if this approach makes sense for you. Also, many employers qualify for a retrospective rating program run by their business or industry association. These programs add private sector-style incentives for investing in a safe workplace and keeping claim costs down. In these programs, a good claim record can earn you a yearly refund of part of your workers' compensation premiums. For more information, talk to your Labor and Industries account manager or follow the link at the end of this presentation. By far, the best way to keep your workers' compensation rates low is to have an accident prevention program. In fact, an accident prevention program is required for all Washington employers. You can look at sample programs to help you decide how to shape yours. They are available on the Labor and Industries website, and we will give you a link at the end of this presentation. There is a host of workplace safety training available, such as workshops, online courses, and videos. Labor and Industries can also send a safety consultant to your work site to help you find ways to make it safer. This service is free, and the consultants will not issue safety citations or penalties. There are a few things you can do to save money on your unemployment insurance taxes. Hire the right person for the job. You can use WorkSource resources to find good employees. Carefully interview and screen your new hires. When possible, rehire laid-off workers. Make sure you report on time and completely. Penalties and interest can be quite costly. Respond to all mail from the Employment Security Department. This will keep you up to date on changes that may affect your reporting. Finally, pay attention to your annual tax rate notice. You have 30 days to appeal the rate on this notice. To effectively plan ahead for your taxes, you should keep proper records. Having the right records can make filing easier. Also, if you're ever audited, having these records on hand will help make the process smoother. For Department of Revenue administered taxes, B&O, public utility, retail sales, use, and litter taxes, you should keep the following records: income documentation, deduction and exemption documentation, and verification of retail sales or use tax paid on capital assets, supplies, or articles manufactured for your own use. Keep these records for the current year and for the past 4 years. For your workers' compensation and unemployment insurance taxes, you should keep the following records: employee name and Social Security number. Keep a copy of the Social Security card in the file. Dates of employment. Basis of pay, such as hourly or monthly. Location of work. Job title and type of work performed. Daily record of hours worked. Original time cards or sheets. Gross pay for each pay period. Payroll deductions for each pay period, and the reason the employee was discharged or quit. Keep these records for each employee, even those you are not required to report, for at least 4 years.